Hello there. Welcome to EMS and grade 8. Today, we want to look at accounting equation as a concept. So, accounting equation, we are going to start by trying to explain what exactly we mean by accounting equation. So, an accounting equation is a relationship that exists between the assets and we are also having owner's equity and also liability. So, we have got three main elements that are there inside our accounting equation, whereby we are saying total assets obviously is one of the balancing figure, and then on the other side we are having our owner's equity, which is our capital, and then we add our liabilities. So you would see that the equation is presented in such a way that the left hand side should be equal to the right hand side. So this is our current equation, which says assets is equals to capital plus liabilities, whereby our capital, we are saying the same as saying your owner's equity. So this equation that we have. So you see that the side, if you put a line here, we are saying this side should be equal to this side. So this is what we have on the accounting equation. So we are going to say that double entry as a principle also obeys the accounting equation. So what we are saying is in every transaction, we know that is going to affect two accounts. We debit, every debit entry is going to have a corresponding credit entry. So we are saying every transaction has got a double effect. That is two uh, uh, accounts are going to be affected. So you can also represent the effects of double entry on the accounting equation, whereby by every transaction, we should be able to adjust on the account equation, whereby after adjustment, the account equation will still balance. So what we are saying, if we are having a total of assets being 100 this side, and also we have a total of capital plus liabilities being also 100 on this side, they should remain the same. After we have effected a transaction in terms of double entry, the total of assets should be equal to total of capital liability. So what we are saying is, let's say we are having in transaction that is two accounts, which is part of us. One of the entries is part of assets, one of them is part of capital. So what is going to happen is if you have a plus on assets, you are also going to have a plus on your capital. So that at the end of the effect of the transaction, the two sides remain equal. Because if you add 50 here, we're going to add again 50 here. And then the opposite is true. If you subtract 50 you're going to subtract 50 on the same transaction so that all the signs remain the same. So even if we are having a transaction which is affecting assets and liabilities, we are going to have the same sign being affecting the amount that is involved in that transaction. If it's plus 100, it's going to be plus 100 again on liabilities. Then, but if you are having a transaction that is on the same side, like a transaction is affecting only assets, so maybe you are debiting an asset and then you're crediting an asset on the double entry. It means if you have a plus, it should be a plus and then in the minus, so that the total doesn't change. It goes back to the same position. Like if you say plus 50 minus 50, it means it comes back to the same total and it remains equal to the other side. So the same applies on the other end. On the other end, if a transaction is affecting capital and liabilities, it's on one side. So you have a positive and a negative. It's affecting capital, it's going to have a plus 50. Like maybe on liability side, it should be minus 50. So that you have 50 minus 50 because they are on the same side. So that their total of capital liabilities should remain the same as total of assets that we have. So this is exactly what we have in terms of um our accounting equation. So if you go to our question part, so we've got a question from a past exam paper that we want to look at on accounting equation. It reads, analyze the transaction below according to the columns provided. So you're given a transaction, you're given account to debit, account to credit, and then the effect on the accounting equation. So on the first part, it said bought stationery for cash from Mighty Suppliers 2,700. So the double entry there involved is that we have got stationery account, obviously, and obviously we are using our cash, so we also have cash account. So which account is going to get into one is going to be credited can be determined by analyzing the movement of cash or money. Here we are seeing that we are buying, so cash is going out. So we are crediting the giver. Remember the concept that says credit giver, we debit the receiver. So the cash movement can also tell you which one to credit, which one to debit. So in this case, cash is moving out, so we are supposed to credit our cash account. So basically, we are saying here we credit, showing it over CR, means we are crediting. So automatically it means the other account should be debited, because we say double entry principle outlines that every debit entry is the corresponding credit entry, which means you don't debit and debit in the same transaction, or credit on the same transaction. So this is what we have. So if you come here now, account to debit, we have identified it as stationary. Account to credit, we have identified it as cash. And now it's now up to you now to decide stationary is part of what in terms of the accounting equation. Is it part of assets, owners, equity, and liability, so that you can show the effect now on the other end? So our stationary, we know that this is an asset. At the end of the year, it remains as stock. So it's an asset. So you've got an asset there. Then cash again is an asset, so you've got an asset again. So our double entry has got all assets. Remember what we said? We said if they are all assets, that is on the same side, we should have a positive and a negative. So we have tried to explain about it like here. If the transaction is the two effects are affecting assets on one side, it means we should have a positive and a negative. So if you come here, it means all the effects are being shown on assets, which means we're going to say the amount is 2,700. We're going to say plus 2,700, and then we also have minus 2,700 on the same on assets. So you'll see that the total for assets will still remain the same with the total that is on the other end, that is on owner's equity plus liability. So go to the next transaction. Bought a second-hand vehicle costing 70,000 by check. So we check the movement of money there. See that we are buying again. Money is going out. So, but here we've got check, and we know that when there's check, there's bank account, which means bank account, and also we have a vehicle account. Vehicle account is debiting. Since we are crediting check, automatically vehicle account becomes a debit. Since we are receiving a vehicle, we are debiting a vehicle. So vehicle account we debit, and then credit bank account. So we are saying vehicle, and here credit bank. And we'll see that these are both assets again. Vehicle is a non-current asset, which is an asset. Bank is a current asset, which is an asset again. Then so we are saying plus 70,000. And we say also minus 70,000. So this is what we have on the same, which is assets. Then we try to see on the next one, which is the last according to video. Let's just try to see what we have there. Right. The last transaction is saying Tando starts his a business with a cash investment of 12,000 rand. So we know that whenever the owner of the business injects money in the operations of the business, we say it's capital. So here Tando is starting a business. So the money that is being introduced in the business by the owner, as the owner starts to operate, is also capital. So we have capital. And then this is coming in the form of cash, and also we have cash. So what is going to happen there is that we should also know that capital is always credited. We can never debit capital account. Whenever we see a capital account, we know that we are going to credit it. So we have got credit, and then the business is receiving cash from in the form of capital. So cash is coming in the business, so we debit. It's the receiver, so we debit. Then we try to identify what part of the account equation is capital, but we see that capital is part of owner's equity. So we are saying here, this one is owner's equity. And for cash, we know that it's an asset. So the other thing that we know that is when it's an asset, when we debit an asset, it's a plus. When we credit, it's a minus on the accounting equation. And the same now applies to the owner's equity. Right, on owner's equity, we are saying obviously we are crediting, it's going to be a plus. So the same applies to liabilities. Liabilities are when you are crediting, that's when you are going to have a plus. It's opposite to assets. And then when we are debiting, it's a minus. So in this case, we subtracting our owner's equity and asset, and we are saying credit owner's equity, which is a plus here, and we debit an asset here, which is a plus again. So we are getting a plus and a plus of 12,000. So we come here and represents our effects in terms of on the accounting question. We start by mentioning which one is going to be debited, which one is going to be credited. So we are saying cash is being debited, and then we have got capital being credited. And we are saying it's affecting our assets, so we can try to represent it. We can try to represent it only with assets. We are saying we're debiting it's a plus, so we are saying plus 12,000. And then we are also having a plus on owner's equity, which is part of capital, also 12,000. So this is the same concept that we explained at the beginning of the video, that when we have this side, when it's a plus on the other side of the equation, and if we go to the other side of the equation, we should also put a plus, which is the same as what is transpiring here. So this is what we guys are putting with the accounting equation. Let's stay tuned for more videos to come as we wait for our upcoming exams. As for this video, I'm signing out. We'll meet again in the next video.